Lots to watch when Comcast reports earnings. S&P Capital IQ equity analyst Tuna Amobi joins me now with the preview. Tuna, good to see you. What are you looking for in terms of growth this quarter from Comcast?
We expect, broad-based gains to be driven by, on the cable side, high-speed data growth and business services, which has been growing north of 20%. And then on the other side, the content side, NBC Universal has really been performing exceptionally well over the last several quarters. The turnaround appears to have taken hold, so we expect NBCU to put up very, very strong numbers in the film division, as well as some of the other theme parks and some of the other content businesses as well.
Let me ask you about the business side, because as you mentioned, it's been a very strong growth driver as of late. How much will those gains continue? In other words, can we expect 20% growth in business services every quarter, or does it start to peter out a little bit?
I don't think it starts to peter out, frankly, in the foreseeable future, just because the addressable market is so large and they have barely, frankly, scratched the surface. If you think about a small and medium size enterprises market where the telcos are dominant, I think Comcast made a kind of entry into that segment just a few years ago. As I think the penetration levels there are ramping up very significantly. So north of 20%, we think is achievable at least through next year at the minimum.
What's Comcast doing with all these cord cutters?
That's a very interesting question around the pay TV ecosystem, the pressures that all of the cable operators are facing, not just Comcast. Comcast has been pretty aggressive in responding to the threats. They just recently launched their own stream package for broadband subscribers. They've been pretty aggressive on the authentication side, trying to roll out content to a variety of platforms. That said, I think the industry as a whole is, that's something that the industry as a whole is grappling with, especially with Netflix and Hulu and others continuing to ramp up significantly. We see that as a longer-term risk factor and not a near-term issue.
Are there any short-term risks for Comcast that you will watch in this earnings report?
Well, the advertising weakness is still an issue there. There's still secular ratings declines, which will likely impact some of the television businesses. On the cable side, we saw that last quarter. And then on the broader regulatory environment, there's still this issue of Title II, which the FCC is still pushing forward, which is a major overhang if you're a broadband service provider like Comcast and others. Overall, we think that those issues are currently priced into the stock.
So, Tuna, what's your rating on the stock and then outlook in terms of potential appreciation?
So we have a 12-month target price of $68. That if you throw in the dividend yield, I think that's pretty much upside, close to 10%. And while that might sound modest, you also keep in mind the company is aggressively, buying back shares. They're on track to buy back almost $7 billion this year. So overall, I think in the context of the broader environment, I think the shares have done relatively well, and granted the deal with Time Warner Cable was shot down by regulators, I think the company's been able to rebound quite very admirably from that and focused on day-to-day execution.
Tuna Amobi of S&P Capital IQ, thank you so much.
Thanks for having me.
I'm Rhonda Schaffler for The Street.